You might be aware that the SEC has put the brakes on deciding whether to give the green light to several Bitcoin exchange-traded fund or ETF proposals. This news is a bit of a bummer for the crypto world, which had its fingers crossed for the SEC to say yes to a Bitcoin ETF, which could have made life easier for folks looking to buy or sell Bitcoin. We want to dive deeper into why the SEC is dragging its feet on these ETFs and what it means for the crypto world. But before we get into all that, we're curious to know your thoughts. Do you think the SEC's cautious approach is justified? And what do you see in the crystal ball for the future of Bitcoin ETFs? Welcome to the Cryptoholics Corner, your hub for all things crypto. Join us as we dive into the world of cryptocurrencies, uncovering insights, sharing news, and demystifying the complexities of this exciting digital frontier. Stay tuned for enlightening episodes, and remember, fellow Cryptonauts, the crypto universe is vast, and together, we'll navigate its depths. You've heard about Bitcoin, the digital currency that's been making headlines for quite some time now. You're curious and maybe even tempted to invest in it because you've heard stories about people making good money. But there's a catch. Buying and managing Bitcoin can be a bit complicated, like navigating uncharted waters. That's where Bitcoin ETFs come into play. So what's a Bitcoin ETF and why should you care? Well, it stands for Exchange Traded Fund, and it's a nifty financial tool. Think of it as a bridge between the complex world of cryptocurrencies like Bitcoin and the familiar realm of stocks. Now here's the deal. A Bitcoin ETF is essentially a special kind of investment fund, like a basket where you can put your money. But instead of containing stocks or bonds, this basket is filled with Bitcoin. This means you can buy and sell shares of this Bitcoin basket just like you would with stocks. It's like having a piece of the Bitcoin pie without needing to understand all the technical ins and outs of owning and securing actual Bitcoins. Now let's talk about the SEC. The United States Securities and Exchange Commission. They're like the watchdogs of the financial world, making sure things are safe and fair for investors. Now when it comes to Bitcoin ETFs, the SEC has been a bit cautious. They've been delaying decisions on whether to allow these ETFs to exist. Their hesitation is partly because Bitcoin is still relatively new and can be a bit volatile. Plus, they want to make sure that any Bitcoin ETF meets certain rules and safeguards to protect investors. They don't want folks to get hurt in the sometimes wild world of cryptocurrency. While there's a lot of interest in having Bitcoin ETFs, it's still a bit of a waiting game. People are hopeful that, in the future, these ETFs will make it easier for everyday folks to invest in Bitcoin without all the tech headaches. But for now, we'll have to keep an eye on the SEC and see how things unfold in the world of Bitcoin and finance. Alright folks, let's dive into why the SEC, or the US Securities and Exchange Commission, seems to be dragging its feet when it comes to giving the green light to Bitcoin ETFs, or exchange-traded funds. First up, we've got the big V word, volatility. Now picture this. You're on a roller coaster and it's not your average coaster. It's one that goes from 0 to 100 miles per hour in a matter of seconds, then suddenly jerks to a stop and repeats this madness. That's kind of like the Bitcoin market. The price of Bitcoin can skyrocket one day and crash the next. This wild ride makes the SEC worry about whether your grandma's retirement savings should be invested in something so unpredictable. One of the big concerns is that these wild price swings can potentially harm unsuspecting investors who might not fully understand the risks involved in Bitcoin. The SEC's role is to protect investors, so when they see something as volatile as Bitcoin, it's like a red flag waving in the breeze. Next on the list is fraud and manipulation. You see, in the world of cryptocurrencies, it's a bit like the Wild West out there. There have been stories of shady dealings, scams, and people trying to manipulate the price of Bitcoin. Imagine trying to play poker with a bunch of card sharks who can stack the deck whenever they want. The SEC wants to make sure that if they approve a Bitcoin ETF, it won't become a playground for financial tricksters. We also have pump and dump schemes, which are a classic scam in the crypto world. A group of people artificially inflates the price of a cryptocurrency by spreading false information or hype, drawing in unsuspecting investors. Once the price is high enough, they sell off their holdings, causing the price to crash and regular folks lose money. Next up, we have wash trading. This is when someone trades with themselves to create fake activity in the market. It can make it seem like there's a lot of trading and interest in Bitcoin, when in reality, it's just one person or a group playing games. We've also got fake ICOs, or initial coin offerings. ICOs are fundraising events where new cryptocurrencies are sold to the public. Scammers can create fake ICOs, promise the moon, collect money from investors, and then disappear into thin air. We've also got market manipulation. Large players in the market can manipulate prices by making huge trades or spreading false information. This can trick others into making decisions based on false signals. Now let's talk about regulation. In the traditional financial world, there are rules and watchdogs galore. But in the land of Bitcoin, it's a bit more like the frontier days. The lack of clear regulations can make it tough for the SEC to keep things in check. They want to ensure that any Bitcoin ETF plays by the rules and that investors are protected. Regulating Bitcoin is no walk in the park, and here's why. Number 1. Its global nature. Bitcoin operates on a global scale, and it's not confined by national borders. So while the SEC can regulate things within the United States, it can't control what happens internationally. This makes it challenging to enforce rules effectively. Number 2. Anonymity. Bitcoin transactions are pseudo-anonymous, meaning they're not tied to real-world identities. This makes it difficult to trace bad actors. Regulators need to balance privacy with the need to prevent illegal activities. Number 3. Technology moves fast. The world of cryptocurrency and blockchain technology is evolving rapidly. Regulators often struggle to keep up with the latest developments and adapt their rules accordingly. And lastly, lack of jurisdiction. Some crypto exchanges and businesses may not be physically located in the US. This raises questions about the SEC's authority and jurisdiction over these entities. The SEC's hesitation to approve Bitcoin ETFs boils down to these concerns: the roller coaster-like volatility, the risk of fraud and manipulation, and the fact that the crypto world isn't as regulated as Wall Street. They want to make sure that if they give the thumbs up, your hard-earned money won't be in jeopardy. It's like they're being cautious parents, making sure you don't spend your college fund on a sketchy carnival ride. Let's talk about what this delay really means for the crypto industry, in a way that's easy to understand. So first things first, this delay is a bit of a bummer for the crypto world. But it's not the end of the road for Bitcoin ETFs. The SEC has put the brakes on decisions about Bitcoin ETF applications before, and guess what? They might give the green light eventually. But in the meantime, the cryptocurrency isn't just sitting around twiddling its thumbs. It's like a teenager going through growth spurts. There are already loads of ways for people to buy and sell Bitcoin. You can do it through crypto exchanges, peer-to-peer platforms, and even ATMs in some places. The whole idea of a Bitcoin ETF is to make it super easy for regular folks to invest in Bitcoin without having to deal with the nitty-gritty of owning and storing the actual cryptocurrency. It's like buying shares in a company without having to handle the stock certificates. But here's the deal. The crypto market isn't just relying on Bitcoin ETFs to thrive. It's expanding and getting more sophisticated all the time. New cryptocurrencies are popping up, and there are tons of projects and companies working on ways to make using and investing in crypto easier and safer. So, sure, the delay is a bit of a downer, but it's not the end of the road. The crypto industry is like a roller coaster, and this is just one twist and turn along the way. Who knows what exciting developments are waiting for us just around the corner. The SEC's delay in approving Bitcoin ETFs is a setback, but not a death knell for the crypto industry. The SEC has delayed such decisions before, and it may approve one in the future. Meanwhile, the crypto industry will keep growing and evolving. So, while it's frustrating, it's not the end of the road for crypto enthusiasts. Thank you for joining us on this exciting journey through the world of cryptocurrencies here at the Cryptoholics Corner. We hope you've gained valuable insights and knowledge that will empower you in your crypto endeavors. Don't forget to hit that like button, subscribe to our channel, and click the notification bell to stay updated with the latest trends, news, and tips. Until next time, keep exploring, keep learning, and keep prospering in the fascinating realm of cryptocurrencies.